Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, I want to do something a little bit more fun. We've got the Bitcoin halving coming up in a couple days, and I wanted to look back at 3 years ago and just see what people on YouTube thought about the Bitcoin halving and how it all played out. Like, you got Roger Ver here, you got some different people in the space and just what they thought about it. It's just fascinating about the price predictions and what actually they thought would actually happen and what did happen and what didn't happen. And also, I wanted to revisit the Tudor Jones, who is a billionaire, and his call to invest into Bitcoin, and why I think it's, as much as it's reported, I think it's underreported, and why this is actually such a big deal moving forward. But first, let's jump into see what's going on with today's markets. So yeah, it looks like we had like a little bit of pullback, which is normal for this type of space. I got to tell you, if you're in the traditional markets, this is super scary. But for us, it's just a Saturday. So I mean, Bitcoin was at like 10.2, 10.3. Now we're at 9.6. Ethereum holding strong, 2.11. XRP, 21 cents. Wow. SV, Litecoin, all that great stuff. Nothing really is making huge gains. So we'll see what happens as the Bitcoin halving comes up, which will be in 2 days or so. I'm expecting big things, but I'm also expecting a big correction moving forward after that. So let's jump into today's fun stuff. So yeah, so these were all like the best type of videos that you could have. I filtered everything out by 2016 and just did a search for Bitcoin halving, and it was fascinating. I watched a bunch of them and they were pretty interesting, and people's price predictions were, I mean, just like what you expect right now. Some people thought it was going to go to $10. Some people thought it was going to top out at $600 or $800, and then some people believed that it would be millions of dollars by 2020. And it was just interesting to see what everybody thought. But I mean, it's the same thing that goes around and around. But the one video that was the most interesting, this was with Trace Mayer. If you don't know Trace Mayer, he is the original Bitcoin OG. He invested when Bitcoin was 30 cents. 30 cents. Imagine that. And he had the foresight to look forward and go, hey, you know what's going to happen with this? It's going to be adopted globally. It's going to be used for different things as the future moves forward, and it's probably going to be a $1 million coin. It's going to go from this to this having to this having this having, and everything he said so far has been pretty much correct. I mean, no one's 100% correct, but if you don't know Trace Mayer, he holds a degree in accounting and law and studied Austrian economics. So he's no slouch. He's been around for a while, and he's got some pretty smart things to say. So the first part, they just kind of did some introduction and some some basic small talks. We're going to skip all that, and we're going to go to the good stuff. What's going to happen in the next 5 years? Remember, this was recorded on June 6, 2016, so let's take a listen.
What you see happening over the next, 5 years and then into the next decade or 2 decades. That's kind of what I was getting at.
Especially in the information, is the crystal ball's kind of clouded, right? But if just 1%, I was out with a multi-million-dollar point. And I laid out some logic to it. If you had just 1% of offshore tax haven assets, which are about $30 trillion, and from what we've seen with the Panama Papers, there's definitely demand for offshore services. So you just move 1% of that into Bitcoin, you're looking at easily $2.8 million per Bitcoin. We've got $21 trillion of debt destruction in China that needs to happen. We've got $13 trillion sitting in domestic U.S. bank accounts. We've got $9 trillion sitting in physical gold, sitting in the gold markets. We've got trillions and trillions of dollars sitting in real estate, in stocks and bonds, and all of these things that are not necessarily safe or liquid or portable. And then we've got all the sovereign risk, are your assets going to get seized? Are they, all of these issues. And so Bitcoin, as it puts down all these network effects and those roots begin to really take hold, more and more capital will get sucked into this vortex, this black hole on the world's, and that price could be $1 million per Bitcoin. I mean, I think this would be made for that. If Bitcoin takes on this settlement currency, programmable trust tool for the Internet of Things, if it's being held on corporate balance sheets, if it's being held as reserves by central banks. And the Central Bank of Antigua, for example, they wrote a paper about how as Bitcoin continues to get more and more trade share that the Central Bank of Antigua should hold Bitcoin on its as part of its reserves. And so, I mean, look at Apple. Apple's got hundreds of billions of dollars of cash on its balance sheet. If the entire market cap of Bitcoin is like $8 billion. I mean, if Apple, and with BitPay, we find that our merchants, that they typically process, between 1% and 2% of their entire gross revenue through Bitcoin once they've been accepting Bitcoin for about 6 months or more. And so if Apple were holding 1% to 2% of their cash balances, their treasury cash, basically, looking at $4 billion of Bitcoin that they would need. And with the 8 billion market cap of Bitcoin, a lot of Bitcoin is not saleable. It's been lost. People have lost the private keys, or it's in really strong hands, or whatever. I mean, we're looking at just huge changes in the price of Bitcoin because it's an entirely new asset class, this cryptocurrency is. And you can think of it like an empty storage vessel. And we've got all these other storage vessels like real estate, bonds, stocks, cash, gold. All of these are storage vessels that are filled up with trillions of dollars of assets, and yet we've got this new storage vessel that could be even a larger storage vessel than pretty much all the other ones except maybe real estate. And yet this empty storage vessel is, there's so much capacity for wealth to flow into it, and it only takes just a little bit of that wealth to bleed over into Bitcoin to really have the price go through the roof. I mean, if taking offshore tax haven bank accounts, 30 trillion, you have just 1% of it move into Bitcoin, and you're talking like huge moves in the price. So it's really exciting. Who knows what it'll ultimately but it could blow your mind, like how much this will transfer the average person, because anybody can just buy some Bitcoin right now, So at the end of the day, transfer happens and people participate in it. They have no one to blame but themselves because they didn't buy a little bit of Bitcoin here or there.
Yeah, I mean.
So, first of all, sorry about the audio. Sometimes it cuts out and there's some double talk, but it's still great information. And I've listened to this now 3 times. And when I heard this time, I'm thinking to myself, man, this is, just looking back, this is a no-brainer of an investment. I mean, hindsight's always 20/20, right? But as I'm looking back, I'm like, oh my God, I can't believe we didn't invest in this, right? I mean, just the way that it's laid out here by Trey. So when he talks about these offshore investments and all the money's kind of sloshing around, he talks about 30 trillion and just a 1%. But did you hear what he said? That it was $8 billion market cap? $8 billion. That's why it's like such a no-brainer. And then even now, we're only at like 260 billion. We haven't even hit, half a trillion or a trillion or 10 trillion. It's just amazing to me. So if you want to take a look at, and I always like to put out information again and again and again, because first of all, not everybody watches the videos every time, and for those who actually come back every time and watch, thank you so much. But I always like to reinforce the teaching that I do, and also to share with people who maybe this is their first time watching the video. So I'm always referencing this little graph, and it talks about the most money in the world, or all the money in the world. So this little square is 100 billion. That's little square is 100 billion. And this is silver. This is all the cryptocurrency. Right now it's maybe 1.5 of that. But here's the biggest companies: Berkshire, Hathaway, Microsoft, Alphabet, Apple. 50 richest people, there's those guys. California GDP, the Fed's balance sheet, which is way higher now, and then 3.5 trillion. Here's the currency and banknotes, that's 7 trillion. Here's gold, almost 8 trillion. Here's the stock markets, 73 trillion. Here's narrow money, broad money, or global money supply, and that's looking about 120, 130 trillion dollars. Here's debt, which is way higher now. Global real estate, and then here's derivatives at 544 trillion on the low end, and then on the high end, it's like 1 point something quadrillion. So when Trace is talking about, there's a lot of money that could flow into Bitcoin or into cryptocurrency, and it's like a black hole. Here's Bitcoin. So yeah, it's going to happen. Anyhow, coming back, I don't know if Bitcoin can do everything that Trace is talking about. 'Cause remember, this is in 2016, and even Trace has revised his thoughts on altcoins. But I see this as a $100 trillion asset class. That's the truth. That's exactly how I see it. And I think there's going to be a large shift of wealth into it, and I just don't see any other way around it. So let's move on, and he's going to talk about, this was the most fascinating part. It's just 2 minutes, and he talks about the returns, and he talks about Berkshire Hathaway, and he talks about Warren Buffett and Rat Poison Square. Oh, it's so good. All right, so let's take a listen.
Just looking at what has happened with the price in just the last year, I mean, we're seeing over 100% return. I mean, getting close to, well, I mean, almost 250% return. I'm not sure what the number is exactly.
Oh yeah, but that type of return is absolutely nothing. You want to know a return? When I started publicly talking about Bitcoin, 4 years, a return 2x what Berkshire Hathaway has returned in the last 40. You know, like that's the scoreboard.
Right.
You know, Warren Buffett, oh, Bitcoin's a mirage. Well, last time I checked, like since I publicly started talking about Bitcoin, the scoreboard is 2x Berkshire Hathaway in the last 40 years. Yeah. You know, scoreboard.
Well, to be fair, Warren Buffett is one of the richest men on earth, so he's probably not that.
That's what I'm talking about.
I know.
That's what I'm talking about. The wealth has to be transferred from somebody.
Yeah.
Right? And his entire, like, they make all the money on insurance and interest and like the fiat monetary system. Sure. Berkshire Hathaway does.
Understood.
If we're going to transition from a debt-based monetary system to an equity-based monetary system, if we're moving from those types of instruments into safer, more liquid instruments like Bitcoin and gold, then guess what? A lot of wealth has to be destroyed, but we're also in the information age, and we have robotics and a lot of things coming down the pipeline, so a lot of wealth is going to get created, but also there's going to be a massive wealth transfer, and it's already started with Bitcoin, but it's so early. You know, I mean, we're looking at $500 a Bitcoin. You know, I mean, that's cool, but you want to know what's really cool? Like $5 million a Bitcoin. That's cool.
And that is cool. So can you imagine that? I mean, the returns and what he talks about, you know, as far as like he did 2x when in 2 years or 1 year, when Berkshire Hathaway took them 40 years. So, it's just amazing to me. And then he talks about Warren Buffett. I guess Warren Buffett called Bitcoin a mirage a long time ago, 4 or 5 years ago or something like that. But he doubled down and he said, hey, this is actually rat poison squared. And I didn't really get it, like, why was he so against it, you know, because it has no intrinsic value. But when you think about it, because Warren Buffett invests a lot into banks and to these types of systems, then of course, like he talks about the monetary system. So why would you even, entertain the thought of Bitcoin, which moves away from debt-based to equity-based? So it just makes sense to me. And he says it right. He goes, there's going to be a transfer of wealth. So as far as, poisoning, it's not going to poison us. I mean, it's just going to poison the traditional markets. All right, so moving forward, now he gets into his price prediction, and try not to laugh when he says this.
We can, when we had the halving happen last time, it was $7. It ran all the way to $266 over a period of a couple months, 2 to 3 months. And then when we had another shock in what I'd say is the saleable transactional demand component of the stock of Bitcoin, was when Silk Road got shut down and $100 million of Bitcoin got seized by the U.S. government. Well, everybody had to go out and reacquire their transactional demand or supply of Bitcoin, and the price of Bitcoin went from $60 to about $1,200 over a 2 to 3 month period. So we usually see about it whenever there's a big shock to the transactional supply of Bitcoin. We see a 2 to 3 month period where the market has to readjust to the new equilibrium price. And the first halving, we're looking at a 30x increased in price when that happened. When the Silk Road coins got all seized and everything, we're looking at a 20x increase in price when that happened. I mean, this time around, 10x increase in price. We're looking at it going from, $250 or $300 a Bitcoin to $2,500 to $3,000 a Bitcoin. And who knows? I mean,
3,000. Yeah, that's what we call a bad day. So it was just interesting to see, like where it all goes. Now, eventually, he talks about, $1 million to $5 million coin, which, hey, whatever. But trying to be conservative, he's like, yeah, the next one, maybe 3,000 or whatever else it is. So just fascinating to me, and that was the majority of it. Now the next part, he's going to talk about, and this is a warning, and it's important that we listen to the whole thing, because it's going to talk about futures markets and how they manipulate and how they play things and how to get away from that.
Exchange, is Bitcoin at risk of going into the futures market and then having the same sort of manipulation, people and whatever the powers that be, people who want to control the price, controlling Bitcoin? Is there a risk of this happening?
There's always a risk, but Bitcoin just has such fundamentally different dynamics. First, you can look at the blockchain and you can instantly assay both the quantity and the quality of the Bitcoin that are in your address. With gold, you actually got to take possession of the bar, and then you got to melt a little bit of it down, and you got to assay it, and so nobody really does that. And gold, you can't just instantly transfer gold over a communication channel like you can with Bitcoin. So, if they're going to try and do monkey business and shenanigans with Bitcoin, they're really playing with fire, because people can demand the physical delivery of the Bitcoin, and you have to have it in a lot of cases. And so that, and we already kind of have a futures component to it with how mining functions, and so it's it becomes a very censorship. Bitcoin is just fundamentally censorship resistant, and I think it's also economically it's not very susceptible to economic censorship, because what are they going to do? Suppress the price of Bitcoin? Guess what? People will buy the bejesus out of it, right? The market will just buy tons of it and be taking physical possession, and eventually they'll run out of Bitcoin to deliver to an address. So I mean, how do you really manipulate this thing? I see it as a very difficult task to manipulate it the way that they've tried to manipulate the price of other things. Now, sure, they could try to manipulate it with high frequency trading, and the bids and prices, but at the end of the day, supply and demand, drives so much of this stuff. Bitcoins remain limited in amount, and the Bitcoin network maintains its censorship-resistant technical properties like BitTorrent is, then I think it'll also maintain this economic censorship resistance, which means it's going to be really, really hard to try and enforce some type of a price control on Bitcoin, because price controls lead to shortages lead to rationing. That's what we're seeing with gold. We'll fail to deliver all of your gold, Germany. You can't do anything about it because we have you occupied with a bunch of troops. It's very difficult to do that with Bitcoin, because you have to have the Bitcoin in order to interact on the Bitcoin network. And so, good luck trying to suppress the price of this thing, because it really just people are just going to buy more of it and sock it away as savings, as speculative demand.
Trace.
So when I heard that, I get it. I totally get it now. The big difference, because I never realized the vast importance of physical Bitcoin settlement, which is what Bakkt and ICE do, as opposed to what the CME does. So when you hear people or investment platforms or hedge funds or whatever else, when they say, or any article that says, hey, there's no volume over there, on Bakkt and ICE, because we've heard about Bakkt, there's not too much volume going on, but the CME, there's a lot of volume going on. It's because the CME is cash settled basis, and that is a problem. So just to be sure, I took a look at the CME, the website, and just to find out what is it, as far as cash or physical base, but options exercise results in a position in the underlying cash settled futures contract. And the money options are automatically exercised into expiring cash settled futures, which settle to the CME CF Bitcoin reference rate at 4 p.m. So when all these different traditional players in the game, they get into it and they go, oh, we're going to get into futures. I see now why Bakkt and ICE don't have the volume that, say, a CME does. Now, things may change. I mean, they seem to change on a monthly basis, but I see at least the fluctuation and why they go in there, because there's a way to manipulate. And that's just that. So the last thing I'm going to leave you with is this, is that Trace Mayer is a huge Bitcoin maximalist, and in some circles that is a dirty word. But Trace Mayer is a pretty smart guy, and he has taken a look at everything, and here's what he said about altcoins. And this was from an interview about 6 months back, and he states, well, it just goes over, it says, Bitcoin supporter Trace Mayer argues that there may be a number of altcoins that can perform specific functions better than Bitcoin and will have a reason to exist and thrive. He states, Bitcoin doesn't need to satisfy all the needs for all the people. Sometimes you want a knife, sometimes you want a fork, sometimes you want both of them together. So we just have to keep an open mind. And he's right. I mean, I'm going to ask you who are watching this video, do you believe that Bitcoin can do everything? Can it be a payment system? Can it be a smart contract? Can it be a global currency? Can it be a bridge currency? Can it be the Internet of Things? Can it do everything that all these different digital assets can do, and they should all go to zero so Bitcoin can do everything? Or do you believe that there's room for more than one king coin? Let me know in the comment section. That's always interesting. Let's move on. So next up, we had talked about billionaire Paul Tudor Jones. He had publicly said, hey, I'm going to invest in Bitcoin. It is Bitcoin futures, unfortunately. But hey, it gives legitimacy to the whole Bitcoin cryptocurrency space. But this was a very detailed post. This is by the Masari Group. And what Paul Tudor Jones is, he sent out a letter to all his investors, and it's probably one of those letters where you have to sign up for however much money it is. So the different articles that had talked about this, they didn't really break it down like Masari Group did because they didn't have access to, I would assume, the whole letter, but I guess these guys did. So in his latest investor letter titled The Great Monetary Inflation, billionaire hedge fund pioneer Paul Tudor Jones revealed he is buying Bitcoin, stating his Tudor BVI fund may hold as much as a low single-digit percentage of Bitcoin futures. Thinking about what sort of value assets will be winners in 10 years' time, he stated, at the end of the day, the best profit maximizing strategy is to own the fastest horse. Just own the best performer and not get wed to an intellectual side that might leave you weeping in the performance dust because you thought you were smarter than the market. If I am forced to forecast, my bet is it will be Bitcoin. That's a pretty good lesson for all of us. Now, there's a lot of people who are on one side for this and one side for that. I'm a maximalist here and I'm in this army and this marine, whatever. We really should be rooting for each other because we're a very small community. So whatever goes up, like Digibyte went up, I mean, hugely. I don't own Digibyte, but I was cheering for it because I'm like, that's great. That's one more asset that goes up, so it brings us all up. I'm super happy. But in the regard where he talks about the fastest horse, he says the fastest horse is the bet on the thing that will be a sure bet to make you money time after time after time. And in that regard, it's probably Bitcoin, and it's probably going to be digital assets as opposed to everything else. And it's for what he wants to do. It's a hedge against inflation. So he broke it down. He took a look at assets, cash, gold, and Bitcoin, and this was the score he gave it. So he says to assess store of value candidates, Jones evaluated financial assets, fiat currencies, gold, and Bitcoin across purchasing power, trustworthiness, liquidity, and portability. And while Bitcoin scored lowest of the 4 overall, he highlighted key attributes of Bitcoin like its known fixed maximal supply, 21 million, and 24/7 liquidity. And the traditional market players love that liquidity so they can take it out anytime they want to. Jones astutely went on to describe Bitcoin's superior portability over other assets, emphasizing its ability to be easily transferred over the internet under extremely adverse circumstances like war. So I always talk about this when I'm trying to tell people of Bitcoin. I say double D, triple S, and it moves. And what that means is it is decentralized. It's all over the place. It's divisible, and triple S. It is smart, which means you can program it. It is scarce or finite, and it is safe, and it's unhackable over the 11 years. So it's better than your bank account, I can guarantee that. And then when I say it moves, I mean it's portable. You can get it you can move it all over the place. Try doing that with gold. Super expensive, super difficult. So here was his score that he put out to all of his investors, and this is looked at different traditional players too, and they're like, hey, that looks pretty good. But when I was reading this, I'm like, why is the score so much lower than gold? Because when I took a look at the report, this is from Van Eck, and they have 49 billion assets under management. as opposed to Paul Tudor Jones. I think they have like 22 million. And they're big gold bugs, but they put this out in January, and they pretty much just laid it out. This is on page 7, where they talk about the difference between Bitcoin and gold. And here's the column for Bitcoin. All this, high. Here's the column for gold and US dollar. So as far as fungible, means it's interchangeable, they both score the same. Non-consumable, both score the same. Portability, moderate, and Bitcoin is high. Durable, they're both the same. Highly divisible, I would have given that a low, because to divide gold, you really got to melt it down. You don't have to do anything with Bitcoin. You can buy a thousandth of a Bitcoin. It's secure, means it can't be counterfeit. It's super high, easily transactable. High and low, sure. Scarce, moderate, yes, and high. And then sovereign, which means it's a government issue it, and they both hit low. Decentralized, gold is low because you can hoard it. With Bitcoin, debatable. And then smart, obviously, Bitcoin beats it. So I thought this was an interesting thing. And I look at Paul Tudor Jones, I'm like, why did he score it that way? Because it doesn't seem correct. But that's just me. Maybe he's looking at a monetary value over time, so I get that. But then there was one thing that I'd forgotten to talk about, and this is on page 12, and it took a look at the asset class, and it talks about Bitcoin historically outperforms where is this? Traditional asset classes. And it took a look over from 2012 to 2019. It took a look at Bitcoin, S&P 500, U.S. bonds, and gold. And 1 month and 3 month, not so much, but year to date, 1 year, 3 years, and 5 years. And you can see right here, it crushes everything. So these hedge fund managers, I know they were scared to talk about it before, but if you have like a legend, as they say in the biz, Paul Tudor Jones, who's talking about like, yeah, I'm going to invest in this, I think it's going to spur some people to go, you know what, not only did this thing kick ass for the last 5 years, but we've got a legend who is considered the best day trader of all time. So maybe we should get into that. Anyhow, moving on, finishing up this article, he talked about how Bitcoin had an overall score nearly 60% of that of financial assets, but has a market cap that is 1/1200th of that. It scores 66% of gold as a store of value, but has a market cap that of 1/60th of gold's value. And he states something appears wrong here, and my guess is that the price of Bitcoin, meaning that the price is way too low and it is being suppressed. So his Bitcoin bull case is this. Jones believes the most compelling argument for owning Bitcoin is the coming digitalization of currency. And this is something I never really thought about. Bull markets are built on an ever-expanding universe of buyers. Projects like Facebook's Libra and China's DCEP will make digital currency wallets commonplace, making Bitcoin easier to own, use, and understand than it is today. And I think that's very true. If we can get more people to understand it, that means they can adopt it, which leads to mass adoption, and I like that. So, again, when he's talking about these things, I think people in the space, in the traditional old boys clubs, are like, oh, okay, well, he does it, so that's okay. And I didn't really get it when I read about it, because I'm just like, okay, it's another billionaire who likes Bitcoin, who cares? But this was explained perfectly by Anthony Pompliano. If you haven't subscribed to him, he's a pretty good guy. He's got some pretty smart things to say. He's been on CNBC Fast Money. He's got his own podcast, and he lays it out pretty simply, because he's been in the space, unlike myself. I'm not in the traditional markets. So let's just take a listen real quick. And I recommend subscribing and listening to this video, because in the very beginning he talks about unemployment and how that's going to disrupt the whole industries, plural, for the next 10 years. And I thought it was a smart comment. So definitely take a listen later on. Let's take a listen to what he talks about as far as this Paul Tudor Jones.
All right, what's the next topic?
Okay. Paul, a billionaire, is getting into Bitcoin. Paul Tudor Jones thinks Bitcoin could be the fastest horse in the markets.
Do you know who Paul Tudor Jones is?
Of course I do.
He's
the hedge fund guy.
Yeah, he's an absolute legend on Wall Street. He's been very early in a lot of asset classes. He's been doing this for a long time. He's worth over $5 billion. And his whole thing was in 2017, he traded around in Bitcoin, but just used it as a trading, asset. And I think he actually doubled his money, doubled some of the money that he put in. So he had a good experience, but just said, look, this isn't actually something that I'm interested in. Now comes, 2020, and he calculates that over $4 trillion has been printed since February, right, by central banks around the world. And he's worried about inflation. And so he went and he looked at all these different inflation hedge assets. He said Bitcoin to him is going to be the winner. He thinks it will appreciate the most and will provide the most protection. And so he's going to take a single-digit percentage, probably somewhere between 2 to 5% of his fund, and he's going to put it into Bitcoin and get exposure to it. One, it's just interesting that somebody who's so, kind of held in high regard on Wall Street and so much part of like the old boys club, publicly is saying this and doing this. I think that's a big validation. It gives a lot of people kind of career cover. Now, if you're at another hedge fund, you can go ahead and look at this and possibly do it, because you can always point and say, well, Paul Tudor Jones did it.
That's what I was going to ask you. Paul isn't exactly like an anarchist or the type of person you think when you think Bitcoin. Do you think that this will bring more people from Wall Street down to the lunch money level?
So he actually says in the note, and I forget the exact language, but he basically says something like, I'm not a crypto nut. Right? Saying like, look, like exactly what you're saying, right? It's just, I'm just looking at this as rationally as possible. And I think that this is important. It definitely will give a lot of people permission to now talk about this, to potentially invest in it and go look at it. And it goes back to what we've been talking for weeks now. There's lots of money printing going on. Inflation is likely to hit at some point in the future. And if you have sound money principles, whether it's gold or Bitcoin, you're likely to be protected. So it's great to see somebody doing that, that comes kind of from the old Wall Street world.
Yeah, pretty interesting. And like, it's the same thing we just talked about, but it just kind of, puts it more into perspective. And I think that when you have something like this come in and then other people who are already coming in, it'll lead to more hedge fund managers and more traditional type of players. Just like this was from April 18th. I guess there's a 166 billion asset manager renaissance. Eyes Bitcoin futures for a flagship fund. And then of course we have the Big Daddy Digital Asset Investment Report from Grayscale. And this was in Q1 2020. And they just laid it out. They've got 2.2 billion assets under management. And they said, look, in the first quarter of 2020, 88% came from institutional investors dominated by hedge funds. And then last year, it was 79% came from institutional investors dominated by hedge funds. So I think they're all here. They're all coming into play. And I just don't see how this can't work out moving forward. So to finish up, he goes on to draw an analogy between Bitcoin and gold in the mid-late 1970s, after gold had just been productized as a futures instrument like Bitcoin. Gold had previously tripled in price in a bull market before correcting more than 50% in 2 years, similar to Bitcoin's 28-month 80% correction. So my last thoughts are this. I mean, I didn't know that. I had no idea that it was, back in the 1970s, it was a futures instrument. That was it. That's fascinating. And then it took this big dip. So I can see the correlation there between the two. I believe that holding gold and Bitcoin is like holding Batman and Superman as far as store of valued assets on the global scale. I think they're both pretty good. Now, I think moving forward, I think Bitcoin and digital assets and cryptocurrency will actually outperform gold. But for right now, it seems like a pretty good investment, especially with the older generation who like gold, younger generation like Bitcoin and everything else that falls in the altcoin realm. Now, my personal opinion is as a global scale, sure. But as far as like a store of value, I still like land and buying land in the States. It just I think it holds value very well. But let me know what you think in the comments section. What is your ultimate store of value? That's the big thing. And that's it for today's video. I know it was a little bit longer, but I try to cover a lot of stuff in a little bit of time. So I just want to say thanks for sticking with me. And lastly, I want to say thank you to all those supporters. I've gotten away from this, so I want to make sure I thank everybody, especially who has hit the little join now tab, which you can see underneath. And it's not much. It's just something to help the channel. It's $1.99. And then for my level 2 guys and gals, we got 2 I'd like to give a big shout out to. All Right Soft and myself, Holz. I think that's how you say it. I hope I didn't butcher that. But thanks to everybody who has joined up. Really helps out, and it just makes me happy to see a growing, thriving community. All right, so thanks so much for watching me till the end. And if you like these types of videos, me too is going to pop up on your left and right. I don't know what they are. They're curated by YouTube. And that's it. Have a great weekend. Stay safe, and I'll see you on the next one.